Is the SPAC boom over?
I think it's on a pause right now as the market digests the sheer level of activity that we've seen over the past 3 months. We estimate that almost 500 companies are looking for M&A transactions right now. So I think investors and just general the investment community is looking at the deals that have been done and potential targets and taking a bit of a pullback to assess where the market is right now.
So what exactly is kind of driving some of that? Is it the rising interest rate picture? It seems to be affecting so many parts of the market. Is it the idea that maybe investor sentiment is changing? Is it the notion that maybe target companies are not as plenty as they were maybe in the last 6 to 12 months?
I think it's a combination of all of that. You have to really look at we've had 770 public companies come on the scene in the last 12 months, which is the highest level of activity in 25 years. So these and many of them are these SPAC deals which were not even on the radar before. So all searching for targets, all searching for business combinations in a similar value range. Obviously the valuation story comes into play here as well. So I do think that there's now, just a very large amount of capital in the system looking for only a certain real number of companies at this point. And I think, that is really causing the market to take pause right now.
Has there been something thematic, Matt, about the types of deals that are being done in SPACs? For me, at least, intuitively, kind of covering news the way that we do in business news, it seems it's like these transformational type companies, ones with a lot of upside. I think like electric vehicles and battery technology, clean tech, that sort of thing. Is that the type of thing that goes through a SPAC? Or why don't people just do traditional IPOs anymore?
Well, so far we are seeing very much that it's the kind of alternative IPO story, which might maybe struggle with a roadshow, might have a little bit of a different story to tell. So as you said, some of the electric car makers, even WeWork and some of the alternative, public lane companies, but then also Virgin Galactic and trips into space. So it has been a little bit of an alternative scenario as far as the public company story, and it is also in a certain size range. So I think there are a number of companies that could potentially, move out of the traditional IPO range and move into the SPAC world. But you do have to have the right valuation, you have to have the right investor story, and also, some of the other related financing that also goes along with it, which seems to be a little bit of the issue right now with the slowdown we're seeing this week.
Do you feel as though there will be more scrutiny over the sponsors, the managers that are raising funds in these special purpose acquisition companies in the coming months? Do you feel as though investors, given about a year or so of this kind of a SPAC boom, are now a little bit more, at least kind of skeptical and maybe exercising a little bit more due diligence on the types of money and the managers that are kind of putting these deals together?
I think that is the case. I think you look at the kind of prolific SPAC issuers that we've seen in the market, like Churchill and FinTech Acquisition and Gores and Social Capital, and some of those that have been able to strike deals, have a track record. There might be some thinning out of some of the other peripheral SPACs, certainly. I think that is certainly an aspect. And then with anything with this level of volume, with this level of capital being raised, it is going to draw certainly scrutiny, potentially regulation, and a little bit of a closer look from the investor community. And I think that is also happening right now as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.